Okay. Let's talk Archer Aviation. ACHR is trading at 675, and they're up 108% this past month, even after the latest pullback today. And zooming out on the chart, we can see this stock is still sitting around 60% of its post-IPO trading price. But for my December 2030 price projection, there isn't any revenue to go off of. There's no net income to go off of. I can't do my EPS versus PE projections that I normally do. They do have a $6 billion order book with their contracts that they can potentially be exercised and realize. And they're aiming for 650 aircraft per year by 2030. And at $5 million an aircraft, that is quite a bit of money. But that's a really high estimation. McKinsey's estimates for the EVTOL industry are about $3 billion a year in revenue by 2030. So, and that's across all the companies globally. So, I don't think either of these are really realistic. I think it's going to be higher than McKinsey's and much lower than ACHR's projections. So I think it's best compared to helicopters, though, because it's the most relevant industry that we have today. And if we look at the market share of helicopters, there's 4 major players that make up the vast majority of the market share. And the helicopter industry right now is about $30 billion a year today. And if we assume that the EVTOLs, their market share is going to be the same size as helicopters today, but in 2030, that's $30 billion. That's a $30 billion industry by 2030. And you divide that by 4, we assume it's going to be distributed roughly the same. That means you get a market cap of $7.5 billion for each of the 4 major players in the EVTOL space for 2030. And if you divide that by ACHR's 430 million shares outstanding, that gives you a revenue per share of $17.43 by 2030 again, which, if you multiply by a price of sales of 3, gives you a share price of $52.30, which is really impressive. That's a 670% increase from today's share price. And again, that's assuming that the EVTOL industry is going to be the same size as the helicopter industry is going to be, or is today. It looks like other analysts are really bullish, 938 for this time next year, which is a 38% upside. But going into our growth expectations, the 2 biggest hurdles right now are consumer demand and regulations. I mean, assuming most of these are going to be sold in the States, you have to go through the FAA. The FAA have confined EVTOLs to the same space as helicopters, and it'll be tough getting approved for more. And once or if they can even pass that, consumer demand is going to be another challenge going forward that could really prevent us from taking off, pun intended. But they're currently pre-revenue and they're burning about $100 million a quarter. So really the expectation from growth purely comes from a place of if you think EVTOLs are going to be a thing, 6 years from now, or if they're not. In terms of valuation, you can't really do valuation because you can't do a PE, you can't do a price of sales because there is no EPS, there is no sales. Like I said, they're burning cash on a net basis. There's 0 revenue for now, but it does have a market cap of $2.87 billion, which is about a third of their $6 billion potential order book. I'm not sure what that means, so do with that information what you will. For health metrics, interestingly, their debt to equity is actually really low at 13.7, which does give them quite a bit of cushion, should they need to go out and do some more cash calls in order to speed up or prolong manufacturing so they could potentially fulfill some of these contracts. They also have $700 million in cash equivalents, so they can at least survive, roughly 7 months without another round of funding, although another round's probably coming up. Overall, though, this is a great example of a penny stock that it's just pre-revenue, it's speculative, it's small, and it really does depend on whether or not you think EVTOLs are going to be around. I mean, it hinges completely on that one fact. Personally, I don't see the use case over helicopters, and I think it's incredibly risky, especially given just the market that's out there for other speculative plays. I think this industry is just way more risky than other speculative bets like quantum computing, fusion power. The tech is already there and progressing, and they just have a lot more use cases that I think they're just as lucrative but less risky, essentially. So for those reasons, I'm going to rate ACHR a neutral because I don't think it's a bad play. I think it's definitely high risk, high reward, but I think the odds of EVTOLs taking off just are not great. I think they're really low, so I'm happy sitting on the sidelines for this one. But anyways, that's all I have for you today on ACHR. Please drop a like, leave a comment, and stay tuned for the next video.